Hello, everybody. Stephen Mead with Domicile real estate for people who love houses. This is our Southern California housing market update for October 20th, 2020. I apologize for the scruffy beard. I've been in the mountains for the past couple of days. Just before we start a little bit, something really important that I want to talk about. And if you don't get anything else from this video, understand this: we run our statistics on the Southern California housing market. So for us, we base our statistics on Los Angeles and Orange counties. And we combine that data into one because, frankly, most cities are contiguous through that range. So there's a lot of border cities where people might be looking in both areas. Good examples like Seal Beach, which is Orange County. You might also be looking at houses in Long Beach, which is Los Angeles County. And the other reason why we do this is because this increases our sample size. So if we are looking to understand what is happening week to week and be able to identify changes happening sooner, it helps to have a better sample size because it reduces a lot of the noise, if that makes sense. So for example, if last week, if I had a smaller sample size, last week 5 houses sold and this week 4 houses sold, well, housing sales are down 20%. Are they really? No, they aren't. But because when you have a very small sample size, it doesn't really give you, it doesn't give you a lot of validity to that data when you're trying to compare week to week. And by doing week to week, we don't have a lot of time. So we need to have a bigger geographic area. Now, here's the part where you really have to be careful. And this is the thing that I want everyone watching this to understand. Our data is based on all price ranges in LA and Orange County. I will tell you firsthand that means there may be market effects in your particular price range or community that are different than these. A good example might be coastal Los Angeles County, say Santa Monica, South Bay, versus the San Fernando Valley and Santa Clarita. Right now, those markets are a little bit different. San Fernando Valley and Santa Clarita are very, very hot markets. Santa Monica, Venice, those markets are a little bit more subdued. They're a little bit different. Now, our data takes the average of that. So my advice is if you have a specific scenario that you are curious about, either an area or a price range or property type, just let us know in the comments. And then that way we can kind of give you some advice that might be a little bit more tailored to your specific area. So now that we got that out of the way, let me go ahead and jump in kind of to our stats for this week. So the big thing here is our new listings. And what we normally see in the fall, and what we especially normally see in the fall of an election year, is we kind of see things just sort of taper off and drop off. And that's not really what's happening. In fact, we are seeing a decline here in new listings, but I mean, we're still at the same level as we were over the summer. Like, it's not really a decline. It's not really a fall decline. Same thing over here in our $1 to $2 million category. So, kind of across the board, we're still seeing very strong new listing performance. While this is a low point in the last maybe 4 or 5 weeks, it's really not a low point overall. So this is kind of our supply side of the equation. So we can really say that supply is steady, especially given that it's an election year. I still have a feeling that things might get a little dicey either immediately before or after the election, but we're not seeing it in the data just yet. Now, if we move on and we look at how are things compared to last year, I think this really illustrates the point. We're at almost 1,900 new listings. The same week in 2019, we were at 1,641. This is a very strong fall. This is in terms of new listings coming to market. Now, of course, the other side of this equation, if we're talking about supply, is what is happening with demand. And, if you do look at demand here, you can see that our new escrows dropped a little bit, and that actually is lower than most of the summer point. So, our buyer pool is a little bit more subdued maybe than they otherwise would be. Kind of a similar effect over here in our 1 to 2 million as our under 1 million category. But by no means is this demand falling apart. Normally when we go into the fall, we would expect to see the demand start to come down and around over here, sort of that beginning of summer level. And we're not seeing that with the new escrows. I still think we're in a fairly supply constricted market. And if we compare to last year, it's a similar story again. We are doing better than we were doing last year. Still a very, very strong fall heading in there. Now, the big thing, right, is how do we reconcile supply and demand? We look at what's called an absorption rate. We look all the new things coming on the market, and then how many new escrows were there? How many people came to agreements on houses? And the reason why I like this stat is because this is very much up to the minute, right? This isn't a delayed statistic. And if we come through here and we look at this absorption rate, what we see is we still see strong results in both of these. This level might be a little bit lower than it's been here, but it's still close to 80%. And I'm telling you, that is still very much a seller's market. It might mean instead of 10 offers on every house, maybe now there's only 10 offers on the really good listings that come up, right? The really attractive listings. Same thing in our 1 to 2 million. And this chart is really the reason why I kind of gave that disclaimer at the beginning that we are reaching a point in our market where the market may not be the same all across Los Angeles and Orange counties. And there might be sub-markets, maybe entry-level single family might be super hot in your community, whereas homes that are in that sort of move-up price range, or maybe even a couple rungs up that move-up ladder, it might not be quite as hot of a market in that price range. This is really taking a look at the whole market. And of course, this is also a little bit of a chance to plug our second market update that we do, which is just for first-time home buyers, where we look at entry-level price ranges throughout LA and Orange County. So we kind of focus on the lower end of prices where both condos and single family. So that comes out on Fridays. So if you're not liking and subscribing and hitting that notification bell, you definitely should do that. Now, if we jump back in here, these numbers are very much what I would expect to see in the fall, except for the fact that they are still much higher than the fall would normally be. And, there's really two theories on this. If you look at these charts, you can either say that this is just a very unusual year and supply and, our demand and our supply are remaining very strong, or you can also do this with sort of the delay philosophy, right? Which is to say that we are just now hitting the end of our summer stride, even though we were in October. Everything because of COVID was just shifted back. So depending on your school of thought, you can look at that both ways. If we look at our price point, and again, this is for our under $1 million, our average pending list price, we see this curve just jumped up through here into the mid sixes, and really it's stabilized out. There's not anything new there. We're not seeing these wholesale huge jumps in price happening anymore. I think what we're seeing is a market that's fairly stable. Now, that doesn't mean that hot new listing that is perfect and look like it came out of a magazine, that somebody's going to overpay for a house like that and just bid it up because they want it. That can still very much happen in a market like this. If we look at our list to close ratio, that has steadily increased. So this is looking at the list price. This is our close rate versus our list price. So on average, we are seeing things close above their list prices. And that's still true. It's eased up ever so slightly, but I actually think this is another one where it's kind of holding steady here, right? Sign that things are maybe getting a little bit easier in our markets overall, but it's definitely not a buyer's market by any means yet. We'll just have to watch the data and see if that materializes. In our $1 to $2 million average pending list price, we saw this dive. This statistic has a little bit of trouble just because between $1 and $2 million, we don't have quite the sample size we do for under 1 million. So these averages can sometimes get skewed a little bit by one, more expensive listing or whether the makeup of listings changes. So, it drops $17,000. But if you look again, if you were to kind of smooth out this trend line, you see it just it went up and then it just kind of is hovering through in this right around that 1.39 to $1.4 million range. I'm really a big fan of using days on market for new escrows as kind of a harbinger of what's happening in the market, right? And the reason why is this is a chart that tells you when you are running out of buyers. When you have buyers, when you have great houses that should be compelling on the market and they're not finding buyers, you'll see these days on market goes up for new escrows. But we're seeing the houses that are going under contract, boy, they're going under contract quickly. there are still buyers out there for desirable properties. And I think, that really is kind of our little bit of a reality check on our situation. That steadily dropped. Now it's been bouncing back and forth a little bit. It went up one day, I think, in our one day in both our under 1 million and 1 to 2 million. That's not really a huge change, not something that I'm worried about. Before we continue on to our last slide that we do, which is our sort of our affordability slide, I want to talk about a conversation I had with a lender a couple days ago who probably will watch this video and know who I am talking about. He made the comment, home prices have had a great run of it and we are due for a market correction. And my answer to that was, I said, it's already happened. Prices have dropped. And he goes, well, what are you talking about? What do you mean prices have dropped? And I said, well, I said, consumers and buyers, they don't go to the lender. The price of a house is a number, right? The number that's important to buyers is, how much am I paying per month? How does this work into my budget? And that's the reason why I would actually argue that home prices have indeed dropped 10 to 15% in the last 2 years. We have had our market correction, but because interest rates have been so low, we have been fairly immune to that correction in price. And if we look at our chart, let me screen share here. You can see exactly what I'm talking about. In June of 2018, if we use that as a baseline of 100%, our payment for the median priced home in Orange County is right about 91% of what it was over 2 years ago. And we're seeing that. What I'm curious about is, and something that's not in this chart that's really important, is we take our average national mortgage rate from a figure Freddie Mac publishes once a week. The last 2 days, because of talks of a stimulus deal, rates have actually risen. So what I'm curious about is the market going to absorb those increases, or are we going to see a little bit of softness come into the market? And that really remains to be seen. Also, we don't know if this temporary blip in rates is just that. Is it temporary or is it long term? There's a phrase in equity markets that a lot of people like to use, and I'm particularly fond of it. It's called buy on the rumor, sell on the fact. So I think what we might have happening is, because of the talks of another stimulus package, we might have people buying into stocks on Wall Street. But once that package either happens or it does not happen, we may see a little bit of a sell-off, which tends to move money towards bonds, which makes interest rates drop. So kind of remains to see whether that is really going to be a long-term effect or a temporary effect that we are seeing. Once again, I think this really hits home that interest rates could potentially be a huge driver in our market. So if you are a buyer who's been thinking about buying a home, number one, you should be listening to our other podcast, Second Plug. That's on Fridays, comes out just for first-time home buyers. But secondly, you really shouldn't be sitting on the fence. A great interest rate is yours for 30 years. This is one of the only countries in the world where you can get that and have that level of security. Definitely don't let an opportunity slip on by. As always, questions, comments, we love them. Don't forget to like, subscribe, and hit that notification bell if you're watching us on YouTube. We will see you next week.